when we had gold and silver and it was in physical form, it was very heavy and inconvenient to carry that around. So you'd put it in a bank and they'd give you a gold certificate or a silver certificate, which you could go into any bank if you didn't like what the government was doing and you could convert it. I think everybody can kind of feel with the inflation that's in the air these days. I was there in 1971. I lived through it and I was, in my late teens. So I didn't really understand that in July when I had a $20 bill, it had some level of backing of gold. And in September of that same 1971, it had just debt backing. And it was now in the control of the central banks.
Lynette Zang often shares how, though she was too young to understand it at the time, having lived through the economic shifts of the past, she now recognizes the patterns of inflation. She emphasizes that these patterns are repeatable and familiar to those who have experienced them. Lynette Zang often explains how this impacts the average person. She points out that the current inflation is a significant issue and criticizes claims that it is transitory, noting that inflation hasn't been transitory since 1913. According to her, there are too many factors at play, such as wages and supply chain issues, for it to be merely temporary. She also reflects on her early days as a stockbroker in the 80s, when globalization was a major topic. She was skeptical about its benefits for the average person even back then. She frequently mentions that the only investment options promoted are Wall Street products like stocks, bonds, and mutual funds. She highlights a major problem. In the US, wealth can only be converted into dollars. If the dollar loses its value and is no longer accepted, she questions what remains of that wealth.
Then what do you have? 1,000,000,000,000 times zero is zero. And that's the piece that people miss. Baked into the very currency system is inflation, because they knew governments could tax you without having to go through legislation. I mean, if you know that you're going to get higher taxes, you might complain, right? They don't want you to complain. They want you to comply. And for corporations, they want to be able to pay people less and less to work, other than those that are chosen few. And so inflation causes that nominal confusion. So 1970, the average wage was about $9,500, but a family of four could live with one wage earner. Now, I'm not saying they were super wealthy, but they could get by. Today, I think the average wage is somewhere around, 54, 58 grand. And on the outside, you'd go, well, I'd much rather have 58,000 than 9,500, except that it takes two wage earners and you're paycheck to paycheck at 100 grand. And everybody that made up to 150,000 got stimulus checks. What does that tell you? What do you think, they want to be nice? It's because the currency is worth that much less. And that's also what's enabled that income and wealth inequality is the system that was put in place because they knew people wouldn't understand it. When you read the papers written by the bankers, by the IMF, by the BIS, by the Fed, by all these guys, right? You'll see that they actually admit to making things really complicated, because if they do that, then people don't question them. I don't understand finances, so, gosh, they must be so much smarter than me. When I read them, number one, I know that what they're doing is they're giving a signal to those that have been deemed too big to fail to shift how they're positioned, but it is always the little guy, the institutional investors that are investing your money that have been picking up the slack so that you don't notice in the bond market how broken it is and how fragile it is, so that when it does implode, well, those big guys have already gotten out. They're already putting their money in hard assets, gold, real estate, etc. And then the little guy is left holding the bag. And I do really feel strongly that you should always do what the smartest guys on any given topic are doing for themselves. So they're selling their stocks and they're buying hard assets. It's so interesting. I came across an article, I think it was in the Financial Times, on the wealthy Chinese investors have stopped putting their money into real estate. which of course we know in China, there's problems around real estate. But instead, they've been buying hard assets like Rolex watches and gold and things like that.
When dealing with bullion like new eagles, you're looking at the spot market. She questions whether the Wall Street spot market truly reflects the fundamental value of gold, given that they can create as much non-existent gold as they want and control it for virtually no money. Lynette Zang explains that she does a basic calculation to determine the fundamental value of an ounce of gold. In her opinion, gold's most important function is to hold your wealth and purchasing power. She believes that if the true value of an ounce of gold is $50,000, then spending less than that on even a high collectible is a hedged bet. Lynette notes that people who buy cryptocurrencies and gold share a similar mindset. They're dissatisfied with the current financial system and seek a decentralized, private place to hold wealth. However, she argues that Bitcoin isn't very private since you have to provide your name, address, and social security number when you open an account. While Bitcoin is decentralized, it still relies on computer systems.
So when we had gold and silver and it was in physical form, it was very heavy and inconvenient to carry that around. So you'd put it in a bank and they'd give you a gold certificate or a silver certificate, which you could go into any bank if you didn't like what the government was doing and you could convert it. So you had a decentralized money that was actually really private and it controlled the government. Because if you converted your gold certificates and took the gold out of the bank, well, then it created restrictions around how much spending the government could do. They didn't like that. So then they transitioned us into convenient paper money certificates because, hey, you can convert it into the gold and silver whenever you want. And look at how much lighter it is. Look at how much more convenient this is, right? And then in the 50s, they started with the credit cards, which had you didn't have to have any collateral. So it was a consumer credit card to get us used to that. I mean, we've been moving in this direction for a very long time. But at least if you're holding a dollar bill in your wallet, well, it is a debt instrument, Federal Reserve note, but it does not pay or charge interest. So you still have that privacy. And even though you can't protect your purchasing power, you can protect your principal.